Hi everyone, today I want to talk a little bit about investor psychology in the crypto market. To understand what's happening at the moment, it's important to look back at the past and see what some of the key drivers are. And for investor psychology, the most basic principle is always maximize return and minimize risk. So let's take a look at this from the crypto perspective. For risk or perceived risk, one of the factors that's been benefiting is time. So you can say that as Bitcoin survives every new day and increases in usage and functionality, the asset gets de-risked a little bit more. And along with this, there are also the emergence of more reputable investors that are giving the market more credential and as such also de-risking the assets along the way. From a returns or rewards perspective, crypto market is relatively attractive in terms of returns compared to other assets, or you can say that it offers a better opportunity, from a cost of capital perspective. And based on investment return comparisons, we do see that it makes sense for investors to choose to risk a small portion of their capital base for a potential 10 times or 15 times return. With this said, what we see now, what we have now is a really bearish market sentiment, and there's essentially a short-term crypto crisis. And just to set some context before I go further, I know there's arguments against price being a proxy, but I still personally think that price is the best proxy for both growth and for value in this market. So that's what I'm going with here. And I tend to break it down in three subsets. So you have your large caps, which are your Bitcoin, Ripple, and Ethereum, which accounts for over 75% of the market cap. They're down 72% this year. Mid caps are down around 60% during the same period, and small caps are down from anywhere between 75 to 98%. Out of the three, the mid cap seems to have held their position relatively better compared to the other two. Some of the reasons perhaps being, number one, investments in these mid caps represent long-term bets that these are the new Bitcoins and the new Ethereum, so your Bitcoin 2.0 or Ethereum 2.0. On the other hand, some of these projects may just have better marketing and communications, and they actually benefit from a centralized governance model because this allows them to have a more consistent strategy and a more consistent messaging for their projects. If prices aren't your preferred indicators, there are also other data that supports a similar picture. You can look at activities and network activities for that. So in the next video, I'm going to talk a little bit more behind the drivers behind the recent price movements.